Okay, welcome back. There's 35 minutes to go for the pre-open session to kick off. Conrad Saldanha is with us, Managing Director and Portfolio Manager at Neuberger Berman. Conrad, great to have you with us here. I think we've been having some troubles on both ends connecting, but finally can see you clearly. Hopefully can hear you clearly as well. I hope you can hear me. Just a quick word on the Fed in terms of whether the question was whether we'll get a sense of whether this is the start of a bigger easing cycle. Do we have that clarity? Because that is meaningful for dollar downside views and EM flows, etc.
Prashant, hopefully you can hear me. Good to connect again. Obviously, it's a 25 basis point cut. If you ask most economists in the US, this should be in a string of cuts coming through. I feel that Chairman Powell, while he's opened the door, hasn't given a super dovish view or max dovish view on this. And so he's trying to calibrate. Obviously, the labor markets are softer, and he's trying to preempt that. And inflation doesn't seem to be a concern. However, I would just caution that, with the tariffs, price increases, given how much that was pre-bought in terms of inventory, we haven't seen that yet. You saw a PPI figure that was strong, and in certain areas, you could see 50 basis points a month, which could be 5 to 6% in terms of inflation. So we haven't really seen that. So it might be super premature to think that this is onward and beyond. And I think we'll have to see how earnings also come through. But given that the dollar has started to weaken, it does give a positive backdrop to emerging markets and a lot more policy relief from an external source to countries such as India in their policy making stance.
All right. Hi, Conrad. Good to have you on the show. But what about the state of the economy with regard to the United States? Because you're getting mixed signals. As you said, the negative impact of tariffs will come in the next quarter. The dollar index as well has weakened, which in turn, for consumers out there, will make things a little bit more difficult. But looking at some data from U.S. commercial banks, out there, the loan growth actually has gone up. So how are you reading the U.S. economy? Because, you want that not to fall apart. Your take on that?
Yeah, I think generally the U.S. economy is super resilient, right? And none of us would have expected coming through here, whether it's inflation, whether it's growth, has really been strong. I think earnings are coming through reasonably well. I would say it's a divergent economy. The higher end spending in the U.S. continues to do well. I think it's going to be how the mass market in terms of consumption holds up. We don't know that yet. And I think that's already seen some pain points. But I would say the economy is very resilient in the U.S. I do not see the wheels falling off here as much as people expect that. The bigger question becomes longer term is how does the fiscal environment look, and what does that mean really for the long dated bonds versus what the Fed does on the short term, because really nobody finances on the short end. So given we want to see that softness in the mortgage rates, et cetera, that could help with consumption and affordability. That's going to be the bigger picture and the bigger question rather than what the Fed does on the shorter term basis. So it's about fiscal discipline. It's about how much can be done in terms of tariffs and the raising of it. But the question becomes is who really finances that, and what's the actual inflationary impact of that once it starts to roll out and come through? And that we won't see for another couple of months at least.
Conrad, let's talk about India now. I've started to hear this view increasingly that new highs by Diwali, all right? So, but that's about 4-5% from where we are now, right? But that's okay. And more than one, 10-12% by the end of the year, this year, remaining year. Now that's the bigger view. And I don't know if you have any thoughts. Sometimes these things are self-fulfilling prophecies, right? I mean, somebody says, and you got, and reasons are same old. FI positioning is very low. It's not as if anything great has changed, but maybe at the margin that consumption will pick up because people will spend more. 22nd is when these cuts go into effect, which is next week. Your thoughts on the market, this market view which is emerging?
Maybe it's wishful thinking and maybe it's self-fulfilling, Prashant. We'd like to think so. Listen, earnings haven't been strong, right? We've seen that. And consumption has been weak. Maybe the GST does help. I think if you get more of these, you can look at them across markets. if you start to see more in terms of appliances, rebates, things like that, that stimulate consumption, I think that's a huge positive for the economy, and especially for the consumption stocks that haven't really done much. And so I think that's an important point to watch out for. I think you still got some pain over the next couple of months, potentially this quarter, and maybe into the end of the year with the Diwali season that starts to bottom out and starts to turn again. I think that is probably more structural for me versus trying to pick, do people rush out and try to consume? It comes down to job creation and, importantly, wages. I don't see that structurally turning. It does help in terms of the stimulus, but we'll have to wait and see. I would think into the festival season, that's going to be much more a bigger driver than seeing that people rush out on GST and any of these cuts and start to spend. That's my view from afar. It's just practical looking through markets, different markets and cycles. But it comes down to, can you see that in the revenues? And importantly, can you see that in earnings? Because the market is not cheap as much as it might have underperformed. You're not looking cheap particularly, and I think you need to see that earnings growth come through.
All right, Conrad, let's get to stocks then. Here in the Indian markets, maybe the headline index doesn't do, what the most bullish views on the street are, but always y'all are, on the hunt for some good bargain buys. In the past, you've mentioned a couple of stocks. I think Shyam Metallics, Jyoti CNC, Orient Pro, some of those stocks you like from the broader markets. Tell us, what's new?
Nigel, we don't change our portfolio a whole bunch. So I would say that when there's opportunities, when these stocks underperform, partly because of liquidity, right? And as you mentioned, foreigners selling, part of it is because EM as an asset class saw outflows. Now you're starting to see that reverse, where you're starting to see, thanks to the weaker dollar, you're starting to see money coming back into EM. And partly people made that switch from India to other markets. The tariff noise did not help in that regard. But for us, I think, I think the structural growth is going to come through in manufacturing. That's what is needed. And I do think whether it's a NetWeb that we've owned for a long period of time, I think that continues to do well. I think the power infrastructure side, you've seen softness in names more recently, like Voltamp. It's still a good business. Yes, there was some selling pressure and news flow that dominated that name. I would say CG Power, they are fairly open to tap into the export market. And this is part of the old group and some of the leftovers of that in Europe. So you've got a good runway for those businesses that I do think are structural and not really dependent as much on shorter term consumption either. I do think that that's a structural growth area for the Indian market. And these are the companies that will facilitate that.
It's always great speaking with you, Conrad. Bunch of more questions, but we're on a treadmill all the way to market open. So got to cover more stuff. Thank you very much for coming on. And next time, thank you.
Makes sense.